Okay, welcome back to our continuing series of video lectures on Chapter 8. In this lecture, we'll talk about discarding and selling of plant assets. This subject is discussed in your textbook on pages 312 through 315, and there's a really nice need-to-know example on the bottom of page 314 and the top of page 315 in your textbook. We will talk about a different set of examples in this lecture. The first thing you need to remember before you do a journal entry to record the sale or discard of a plant asset is to be sure to bring the depreciation expense up to date of the disposal or sale. Then the next thing you need to do is calculate the actual gain or loss on the disposition. And you can use this method. This formula will work in every single disposition except exchanges, and we're not going to talk about exchanges in this class. So you need to first record the proceeds from the sale. That's usually the cash you got from the sale of the asset, but proceeds could be received in any form, such as another piece of land, or perhaps some services, or maybe relief of debt. All of those would count as proceeds from the sale of the asset. From those proceeds, you need to subtract the net book value, and we've been talking all along in this set of video lectures that net book value is cost minus accumulated depreciation. When you take your proceeds, subtract the net book value, that will equal a gain or loss on the disposition or sale of the asset. You can use this formula every single time. Then the journal entry, if this calculation results in a loss, then you're going to want to make this journal entry. First, debit the cash or other value you received. Next, you need to get the asset totally off the books, and you need to get to the accumulated depreciation totally off the books. Accumulated depreciation is a contra asset account with a normal credit balance, so to get it off the books, you have to debit that account. So next, debit accumulated depreciation. Then debit an income statement account. It would be called something like loss on sale of plant assets. And then credit the actual asset account itself, because like I said, you want to get it completely off the books. So you would credit the equipment account, or credit the vehicles account, or credit the trucks account, or credit the office furniture account, whatever account this specific asset is originally recorded into. That's if it's recorded as a loss. If the asset is sold at a gain, it's basically the same journal entry, except instead of debiting a loss on sale of asset, you're going to credit a gain on sale of asset. So here's your journal entry if the asset is sold at a gain. Debit cash or other value received, debit accumulated depreciation, credit gain on sale or disposition of the asset, and credit the actual asset account itself. So let's work some problems. Number 1, ABC Company had a desk with a broken leg and decided to take it to the dump. The desk cost $1,200 and it was fully depreciated with no salvage value. Record the disposition of the desk. Well, first we have to calculate a gain or loss, and this could be a break-even, by the way. If we took it to the dump, how much did we get paid for the desk? Absolutely nothing, so our proceeds are zero. How much did that desk cost us? $1,200. And if it's fully depreciated with no salvage value, how much depreciation has been taken? $1,200. So the net book value of this fully depreciated asset is 0. Proceeds of 0 minus net book value of 0 equals a 0 on the gain or loss. So when we look at recording the journal entry, we're not going to have an asset or other value received, so we'll leave that line off. And we're not going to have a gain or loss on sale of the asset, so we'll leave that line off. And all we're going to do on this journal entry is debit the accumulated and credit the asset. Debit the accumulated depreciation for the $1,200 that was in that account. It had a credit balance. We debited the account to zero it out. And we credited office furniture for the cost of the truck. Office furniture had a debit balance. We credited the account to zero out that account balance. Let's do another example. The same as number 2 above, or number 1 above, except that the accumulated depreciation to date of disposition on the desk was $900. So it's the desk with the broken leg. The desk cost us $1,200. The depreciation taken to date of disposal is $900. Let's plug some numbers in to calculate the gain or loss. Proceeds. We took it to the dump. We didn't get paid anything. Our proceeds are 0. The cost of the asset is $1,200. The accumulated depreciation to date of disposition is $900. $1,200 of cost minus $900 of accumulated depreciation equals $300 of net book value. 0 minus 300 equals a $300 loss on this disposition. I'm going to let you write the journal entry on this. There will be 3 lines in your journal entry. Come back and check your answer when you're finished. And the journal entry is debit accumulated depreciation for the $900 of depreciation taken to date, debit loss on disposition of plant assets, $300, and credit office furniture. And it'd be okay if you had another account title on this loss, such as loss on disposition of furniture or loss on scrapping the desk, something on that order, as long as it's on the income statement. Let's do another example. XYZ company sold a truck it had been using in its business. They sold it for $8,000. The truck originally cost $35,000 and accumulated depreciation to date of sale was $30,000. Record the sale of the truck. First, calculate gain or loss. Proceeds. We did receive some money. We received $8,000 on the sale of this truck. The cost of the truck was $35,000. Accumulated depreciation to date of sale was $30,000. That means we have a $5,000 net book value on the truck. And $8,000 minus $5,000 is a $3,000 gain on the sale of the truck. Let's write the journal entry. I already have some words here. But you go ahead and finish up this journal entry and come back when you finish it. I'm going to make it a little harder on you. So the journal entry is debit cash for the $8,000, debit accumulated depreciation for the truck, $30,000, credit gain on sale of plant asset or gain on sale of vehicles or gain on sale of trucks, $3,000, and credit the actual asset itself, trucks, $35,000. That makes the balance sheet 0 with respect to that truck. The truck is totally off the books. No asset, no accumulated. We gained some cash, and we had a gain on the sale of assets, which is income. Let's do the final example, number 4. I'm going to have you do the entire thing. It's the same as number 3 above, except you sold the truck for $2,000. Go ahead and calculate your gain or loss on the sale of the equipment, and then we'll go, or on the sale of the truck, and then we'll go ahead and write the journal entry. Do your calculations and come back and check your work. So in this case, the proceeds were $2,000. We did have a $35,000 cost. That didn't change. We had accumulated depreciation, the same. That didn't change. Therefore, we had a loss on the disposition of this truck, $3,000. Loss on sale of the truck, $3,000. So go ahead and record your journal entry. When you come back, start the video again and check your work. So the journal entry is debit cash for the cash that we received, debit the accumulated depreciation of $30,000, debit loss on sale of plant assets or sale of trucks, $3,000, and credit the asset itself, trucks, $35,000. That's the end of this journal entry. When we come back, we'll talk about natural resources, and hopefully we'll be able to get to intangible assets as well. See you next time.